So problem 6-1A, it says Warner Woods Company uses a perpetual inventory system. It entered into the following purchases and sales transactions for March. For specific identification, the March 9 sale consisted of 80 units from the beginning inventory and 340 units from the March 5th purchase. The March 29 sale consisted of 40 units from the March 18th purchase and 120 units from the March 25th purchase. So the first thing they want us to do is compute cost of goods sold, available for sale, and the number of units available for sale. So let's start first with how do we compute cost of goods available for sale? Shouldn't we take everything that has been purchased and calculate that? Because that would mean that would signify that that's available, right? So we have beginning inventory, which was how many units? How much? How many units for beginning inventory?
100.
100 units. And at what price? $50. Which totals what? 5,000. And what's the purchase that you had? What date?
March 5th.
March 5th for a purchase. How many units?
400 units.
400 units. At what price? $55. Which equals how much? 22,000. What's the next purchase? What date? March 18th. How many units? 120 units. At what price? $60. So it was worth how much total? 7,200. Next purchase? March 25th. How many units? 200. At what amount? $62. How much total? 12,400. And do you have any more units purchased? No. So this column should be the units that we have available. Calculate that and tell me how much. 820 units. And total, how much is the inventory worth? 46,600. This amount is our cost of goods available for sale. Now the second part said we need to find out ending inventory, right? So we know that we started off, well, we know in total we got 820 units, right? So we say units available, 820 units. And then how much did we sell? In units. 500 units? 580 units. So we know we need to subtract that, right, from our available units, which means we should have had an ending inventory of how much? 240 units. I'll give you a chance to write that down if you don't already have it, and then we'll go on to the next part. Okay. The next part asks us to do, um, the different costing methods, which the first one is FIFO, right? Oh, we did that. So using FIFO, you had beginning inventory of how many units? 100 units, and they were at what amount? $50, which equals 5,000. And then on, you said March 5th, they purchased 400 units at 55, which means now they have 100 units at 50 and also 400 at 55, right? So what's next after March 5th? They sold, what's the date? March 9th. So they sold how many units? 420. So where do we pull them from? So we do 100 at 50 and then do 320 at 55 because it's first in, first out, right? Which means we have how many left on hand after this? It's just 80, right? 80 at 55. And what's next? Next date, March 18th. What happened? Purchased or sold? How many units? What's the next date? What's the date? March 25th. 200 units. That's 62. What's next? What date? So 329, they sold 160. And we're gonna pull that 160 from where? 80 at 55, right? What else? 40 from 120. So 40 at $60, which means you have ending inventory of what? You said they took 40 at $60? This doesn't equal 160. 80 at 60, which leaves you with the ending inventory of what? $120 minus 80 leaves you how much? So you got 40. Everybody needs to shut those cell phones off. 40 at 60 and 200 at 62. Calculate this for me. 40 times 60 and 200 times 62.
45, 60, 400.
Okay. $200 times 62.
12,200.
12,400. The next cost assumption we're supposed to do is what? Lifo? So with Lifo, we're doing the same thing. 3-1, which was beginning inventory, which was the 100 units at 50. March 5th, you had a purchase, right? No? 400 units at 55. March 9th, you had a sale. Where do we pull those 120 units? From the 400, so we pull a full 120 at 55, which means you have ending inventory of what now? The 100 at 50, and what else? What is 400 minus 120? And then you have 280 at
55.
wait a minute. There's a problem. Why do I say there's a problem? How many units did they sell on March 9th? 120 or 420?
420.
That's the problem. That's the problem. It makes sense. All right, so the 420, we pulled 400 fully from here, right? Because that was the last. And then we had to pull the remaining 20 from the 100 at 50. So that left us with 80 at 50. What's the next date?
March 15th. And we purchased
How many did we purchase? 120 at 60. What's next?
purchase.
What's the date? Purchased 200 at 62. Next,
March 29th.
March 29th, sold 160. Where do we pull the 160 from? The 200. So we can do the full 160 at 62, which leaves us with how much from our ending inventory? 80 at 50. How much? 120 at 60 and 40 at 62, which means that we have a total of how many ending in the inventory units? 240. And it equals out to how much? 80 units times $50 is how much? 4,000. 120 units times 60, 7,200. 40 units at $62, 2,480, for a total ending inventory balance of how much? 13,006. Who? 680. Okay, the next method is weighted average. So with weighted average, 3-1 is still the same. Beginning inventory at 100 at $50, right? Which equals 5,000. Now on March 5th, they purchased how many units? 400. At what price? $55, which means now they have that 400 at 55. March 9th, they sold how many units? On March 9th, they sold what? 420. And we got to find out what the average price is now, right? So the way that you find the average unit price is you got 500 units in inventory. You need to divide them by how much is total is worth, which is 27,000. So 27,000 divided by 500 equals what? Why would it be 22,000? 100 times 50 is 5,000. 400 times 55 is what? So 22,000 plus 5,000 is 27,000. So the 27,000 divided by the 500 units that are in inventory gives us an average unit price of what? $54. So that is what we're selling these items for. So we sold 420 items at $54, which means we had how much left in inventory? 80, right? 500 minus 420 sold equals 80 units left, and they're at what new price now? $54. Next date was March 18th. And what did they do? They purchased 120 units at what? $60. And March 25th, they purchased how many units? 200 units at what price? $62. So we add that. Now our new average price, we have a total of 400 units here, right? And 80 units times $54 equals what? $4,320. 120 times 60. 7,200. 200 times 62.
$12,400.
12,400 for a total of what? 4,320 plus 7,200 plus 12,400 is what? 23,920. Now, if we take 23,920 and divide it by 400, we get what? What's our average unit cost now?
Do you round up?
$60.
Don't round up.
59.
So 59.80.
Yes.
So on 329, when they sold, how many units did they sell? 160. So now we're going to do 160 at our new weighted average amount, which is 59.80, which means we have how many units left in inventory? 400 minus 160. Still 240, right? But now they're at what price? 59.80. Good. Next one is specific identification, which instead of going the way that we went with the other ones, you can do this one a lot more simple, which is basically take the information that they've given you as far as ending inventory in that problem. They told you there were 80 units at what price? We're on specific identification now. They told you they had ending units of 80 units from beginning inventory. 340 units from where? March 5th. 40 units from where? What date? March 18th. 120 units from what date? March 25th. So we're going to take that and find out what our goods available are and subtract out what's ending. So we can say they said 80 for beginning inventory. So that's times what amount? What's the unit price from beginning inventory? $50. Which equals what? $4,000. Then you had 40 units at what? I'm sorry, 340 units at what? At the March 5th purchase, right? What's the unit price? 55. So that means it's how much cost of goods sold? 18,700. And 40 units at what? 40 units from March 18th purchase, which was how much per unit? $60. So 40 times 60. 2,400. And then you also had 120 units from the March 25th purchase, which was at what unit price? $62. So that means it was worth what? 120 times 62? 7,440. All of these numbers added up equal what? $34,540. Everybody agrees?
I agree. I concur with that.
34,000?
82,500.
So what was our amount of goods available to us? This was basically our ending or cost of goods sold. But everything we purchased was what? What were all the purchases?
Plus we available 46,600.
46,600. And so if we subtract out our cost of goods sold, which is 32,540, that gives us an ending inventory of what? $14,060. And that's it for that method. Next, they wanted us to compute gross profit earned by the company for each of the 4 different costing methods. Now, the only way you can do that is remember what it cost you for the purchases and what was the amount of sales you made, right? So go back and look through all of those methods that we just did. We did Fifo, we did Lifo, we did weighted average, and we did specific identification, right? And we need to know what the sales are because gross profit is sales minus cost of goods sold. That's what equals gross profit. So what were the sales for FIFO? Total sales. Go back to your FIFO workout.
That what was the amount of sales?
Mm-hmm. If you look at what was sold under FIFO, you sold 400 units at 55. You sold 100 and no, I'm sorry. You sold 100 units at $50. You sold 320 units at $55. You sold 80 units at $55 and 80 units at $60. That's the cost, but we need to figure out how much it cost us as well as what was the actual sale. Oh, Lord. Go back to your FIFO breakdown. How much did you say on March 9th you sold those 420 units for what price?
$85 each.
So calculate that. And I'll put them up here. 3.9. You did 420 units at what? $85. And then on March 29th, you did 160 units at what price? $95. So you need to calculate that because these are sales. And then your cost of goods sold on 3.9 for those and 3.29 for FIFO. On 3.9 you did 100 units at 50 and you did 320 units at 55. And then on 3.29 you did 80 at 55 and you also did 80 at 60. This is gonna be your cost of goods. So these are the numbers that you need to figure out. The sales stay the same for both, all of the assumptions. Lifo, on 3.9 you did 400 units at 55, and you did 20 units at 50. And then on 329, you did a whole 160 units at $62. So you need to figure out what that is. Weighted average on 3.9, you did 420 units at $54. And then on 329, you did 160 at 59.80. So you need to calculate that. And then under specific identification, 3.9, you did 80 at 50, 340 at 55, 329 you did 40 at 60, and 120 at 62. So these are going to be cost of goods sold and sales. So what did you come up with for sales for 3.9?
34,440.
34,440. What about 329?
15,200.
So for a total of
49,640.
something's missing.
That's where 35 is supposed to be 35,700.
35,700 for a total of what? 50,900. So we know, if nothing else, sales for each one of these is 50,900. Now for cost of goods sold, under FIFO, what's the total amount you have for FIFO? 31,800. What about LIFO? Yes.
B9, what is that? Times
Yeah,
what is it, 100?
400.
No, for like
100. What about your LIFO? Bless you. 32,000. What is it? 32,000 what? 920. What about your weighted average?
$32,248.
$32,248. What about specific identification? $32,540. So now we can calculate gross profit. What's gross profit for FIFO? $50,900 minus 31,800. 19,100. What about for LIFO? 17,980. Weighted average? 18,652. Specific identification?
18,360.
18,360.